Hey everyone, welcome back to Investment Physics. So we were discussing if Rivian is a buy. We have a part one video where I already went into the fundamentals. I showed a few metrics, and then it doesn't look very promising from a fundamentals perspective. But that does not mean that you completely have to ignore the company because there is a chance that some of these startups can grow very big tomorrow. But do understand that only 2% of the startups succeed. A lot of others will go bankrupt, and you have to place your bets accordingly. Let me continue sharing my screen. Yeah, so this basically shows who are the largest holders of the Rivian stock. It shows that 17% of Rivian stocks are currently held by Amazon. There are a lot of other companies in here, but most of them are like well within the 5% range. No large names here or large holdings here, but Amazon seems to be the only one. Why Amazon? Well, I have to give you some history here. So there was of course Tesla, which was booming, and they were completely creating a revolution in the EV space. But then whenever there is somebody who disrupts the market, all these other companies too want to get into the game. And usually either they try to build their own cars or they try to acquire companies or invest in other startups which they think are likely to succeed in the future. At some point, Apple was also having like a self-driving car division, and they were poaching a lot of people from the Tesla self-driving car division. But they didn't think it was going anywhere, and they shut down that division eventually. Um, Amazon definitely wanted a space of the EV pie, like they wanted a piece of the EV pie, and I guess that's why they decided to invest in Rivian. So it shows 17%, but I read some news reports last week that they have increased the stake and they currently own up to 25% or something like that. There was also a deal between Amazon and Rivian that they will take 100,000 delivery trucks from Rivian. And this was done all the way back in 2019. But then there have been some qualms from Rivian that they are not placing large orders, or that Amazon is placing only 10,000 truck orders per year. And that too, they are placing the orders in the lower end of the segment. And because of that, they are not getting as much sales revenue as they expected. This deal was supposed to be having some exclusivity in the sense that these trucks were built by Rivian only for Amazon's delivery truck purpose. But because there have been some back and forth between how much was promised and how much was delivered, I think Rivian is trying to explore about selling their trucks to other possible companies as well. It is not yet clear what is going to play out in the future or how the deal is going to work out between these two companies. But that's exactly why you see like a 17% ownership of Amazon and Rivian. Another reason why they do this is when you have a large ownership in a company, you are part of the board and you can control the way the company operates. You can force them in and out of certain deals. And since Amazon is trying to sign up like 100,000 fleet delivery truck from Rivian, it would probably be a nice idea to, be a large majority shareholder and be on the board of Rivian. So that also kind of explains why they might have went ahead and bought so many shares for Rivian. Um, Let me continue with some other interesting things for Rivian. Um, so this basically shows the sales growth. So because Rivian is a startup and because they are currently only like 10% of Tesla, there is a lot of room to grow. It is not yet clear whether they will grow because making EV cars, it needs a lot of factories, gigafactories, battery technology. You need an entire charging ecosystem and infrastructure throughout the US. Like Tesla has something called Tesla Supercharger that you can drive anyway from the east to the west coast, and there are places for you to charge all along the road. Rivian does not have any of that at the moment. I'm not sure if they are brokering a deal with Tesla Supercharger network. I know that some other companies they are in talks with Tesla, like they pay some royalty to Tesla so that they can use the supercharger network to boost their own EV sales. I'm not sure if Rivian has already done that or will do that, but I'm just showing you some, pitfalls of what could prevent Rivian from becoming this big. But anyway, these are some of the growth estimates given by the analysts, and you see that all these numbers are over 100%, which means that a lot of growth is expected. But in the past, whatever I showed you, the forward PE, it does account for these large growth, and even then, Rivian is not expected to be profitable until 2028. Um, Let me show you another method which is popularly used by stocks which do not have a lot of profitability currently. So this is called as the DCF method. DCF method stands for discounted cash flow valuation. Um, of course, it would need a full video to explain how this is calculated. But what I can say in simple terms is that let's say you are selling something today, and then you kind of know that you will sell X% more next year and Y% next year in the year after and so on. So then you start calculating if I sell products worth so much revenue this year, and if my company grows by this much percent, what will be my sales revenue next year, the year after, and go on like that. And once you have the sales revenue for the next 5 or 10 years or whatever, based on this growth percentage that you modeled, then you calculate if 10 years from now, if my company's revenue is going to be so much, if my company's profit margin is so much, if my company's taxes are going to be so much, and if this is going to be my net cash flow for the company 10 years from now, then what do you think the stock price is going to be today? So it's basically kind of a reverse engineering, like you think far out ahead. And then based on the values like 5 or 10 years away, you kind of reverse it back to see what is a good percentage today. So based on this tool that I found online, it says that the value is 12.94. There are, of course, this is not again like a set in stone method because there are a lot of variables that could change. Like it's possible that the growth could be higher or lower than expected. It's possible that your profit margin could be higher or lower than expected. It's possible that this company could make deals with some other large fleet operator like UPS or FedEx or something like that to sell a lot of delivery trucks to them. And then suddenly they are going to get a lot of sales revenue. So all these kind of unknowns are not accounted in this model. It basically just deals with info that we know today, and it has some basic assumptions of what your sales revenue might look like the next year and the year after and so on. Let me just scroll down and show you what I'm talking about. So this is basically like for 5 years from now. It shows that the revenue for year one is 4171. I think it's in millions of dollars. Yeah, it is in millions of dollars. Yeah, this is 4171, and then the year two is 85, and then 12, 18, blah, blah, blah. So you can see that from year one to year two, there is roughly 100% growth in revenue. And I did show you some analysis, some analyst estimates that there is like 100 plus percent growth in revenue, like for 1 year. So I think this tool is also taking into account whatever the other analysts are talking about out there. And then from year two to year three, it's showing like a 50% growth. And from this to this is again another 50% growth in revenue. And from this to this, I think this is also something like a 50% growth. So this is the operating margin. Operating margin is basically like the amount of profit percentage they make every year on the sale. Of course, currently they are loss-making company and they are expected to be in the same loss until year four at least. That is why you see that the operating margin is negative. Year five, they are barely making it positive. So that's why you see a 0.95% here. And operating income basically shows like if you made this much profit and you remove your operating margin percentage, the remaining what is left is operating income. So you again see that it starts with a very negative value, and then it only in year five it becomes a slightly positive value. And then based on this, they are estimating the free cash flow to the firm. So you see that it is becoming slightly positive only in year five at 193 here. The discount rate. So the discount rate basically, so this number, you can call it like a corporate tax rate. It's basically if you were to take a business loan to grow your company, what is the amount, the loan percentage that you will have to pay. So they in this particular model, they have assumed it to be 9.1% because currently the interest rates are very high. But in the future, if the interest rates were to drop, then this discount rate would also it is, of course, there are many methods to calculate the discount rate, but usually it is between 7 to 9%, depending on the interest rate prevalent at that time. So based on this interest rate, they have calculated the present value to be like 125. So this is, like I said, a lot of assumptions here, and based on this, they have calculated like the current DCF value to be like $13. It says that it's overvalued by 48%. Is this the only tool that out there that does a DC evaluation? No, there are many tools and they all give different answers. You can also do your own calculation. There are videos on YouTube on how to do DCF analysis. There are some ready-made spreadsheets. You of course have to input these values of what the sales growth looks like and what the discount rate and all this, and then you can arrive at your own conclusion. But of course, all models will make some underlying assumptions that may or may not hold true for a long period of time, like 5 years. Um, so based on the DCF analysis and these forecasted financials, you see that the stock is still not justified to be at a $25 price range today. Um, so let us, okay, so this basically establishes that it's you definitely cannot buy large amounts. Like, don't put all your life savings into Rivian. And even based on most of the fundamental metrics we have, it is not expected to make a loss at least for 5 to 6 years in the future. So does that mean you have to completely stay away from Rivian? Probably not. What you can do if you're really interested in this company, one is put some small amount that you're completely okay with losing and then just wait out 5 to 6 years and see where the company grows. If the company does well, you might get like 50 or 100% returns. Or probably even more. But if the company goes bankrupt, you should be okay with losing that amount fully. What this amount is, I cannot tell you. You have to decide for yourself. For some people, it would be $100. For some, it would be 1,000. For some, it would be 10,000. Whatever it is, if you believe in the future of Rivian and if you have driven the Rivian car and if you like its interiors and its performance, then this is one bet that you can place. The next thing we would like to see is if there are any short-term trades possible. Like I showed you here in data, Luama, that some hedge fund managers are buying and selling every quarter as and when they see that the valuations are changing. So I'm basically trying to see if there is something like this that we can do for very short-term profitability. So let me open the chart here. Yeah, I'm not going to do too much of charting because that again would take a lot of time to explain the metrics and all the tools that I'm using. I've drawn a very simple line chart. I've just put maximum interval here and I've put like a 1 day interval. So you can see that at its peak, let me just zoom out a bit. Yeah, at its peak here in 2021, the stock was at 163. I thought 100 was the max. Okay, 163 was the max, and right now it has fallen by way more than 80%. It's currently at 25, 24, 25-ish. So let us see if there is any basic supports and resistance that we can play with. You see here that there was some strong resistance at $21, and we have basically crossed that, and it has been like holding its fort here at $25 for a few days, which means that it's likely that it will be able to go above 21. How much more? Let's see what is the next support and resistance here. So when I see the lower band here, it shows that it is $28, and at the most upper range here it shows that it is $40. So of course there are a lot of ups and downs here between 30 to 40 or 28 to 40. So it is probably likely that this stock could reach $28. Of course, this is not based on fundamentals or anything. This is just based on the thing that there is some volume here and it has crossed the initial resistance of $21. So it might reach 28. I do not know how much time it will take or whether it will happen even, but I can just say it's probably likely. Also, this sudden volume you see here in the last few days is because of the deal with Amazon that they're going to sell more delivery trucks and all that kind of stuff. So it's basically like a news-based event that has triggered the sudden upsurge. Um, so this is just going by very basic supports and resistance. I've not done anything complex here. I also want to show you options chain. So options chain is basically, it shows how others who trade in the options market think about any particular stock on any given interval of time. I use it to identify supports and resistances. I again will not go into too much detail on what an option chain is and what to consider and stuff. All I can say is there are puts and calls, and there are these numbers here called as open interest and volume. Whatever you see as a very high open interest on the call, it's usually a resistance, which means the stock usually will not go above this number. And on the put side, whatever is a very high number in the open interest and the volume, that is called as a support. So July 14th is the peak ending now. And for this in the puts, I see a very high volume and open interest at around 22.5, and interestingly at around 24 even. So it is likely that this stock will not fall below 22.5 as of July 14. Um, the the 24, though the volume is very high, I would be very doubtful about this because the stock is currently trading at 25. And I'm not sure if this is like a solid support or if it is just some short-term bets that other option players are playing. On the high side, I see that uh, there is something at 25 and 26. So it means that most people don't expect the stock to go over $26 on July 14th. But of course, it may not be interesting to see what is going to happen 1, 2, or 3 weeks from now. But let us see what the options market think that the stock might be worth next year. So I have another one opened here with the June 2024 expiry date. Um, it's taking time to load. Let me see if I can do it here itself. It's not loading. Okay, I can probably tell you what I saw in the past. So even in June 2024, most people did not expect it to go over 30 to $40. Oh, okay, look here, it is loaded. So let us see in the call whatever is the highest volume and the open interest. So you see that the volume and the open interest here are the highest at $40, which means that most people are not expecting the stock to go over $40 even 1 year from now. On the low end, you see that there is a high open interest and volume at 15, which means that most people are not expecting it to fall below $15. If you remember, I showed you the DCF valuation. It showed to be $12.98, and this support of 15 is also closely matching. So it implies that The stock is going to be very range bound between 15 to $40 like 1 year from now. And without a clear sign of profitability in 5 or 6 years, there may not be much upside. So, like I said, if you really trust in the product that this company produces, if you trust in the management, and if you are okay to wait 6 or 7 years, and if you're okay to completely lose whatever money you're going to invest, then go ahead and buy. If you're looking for short-term plays, just keep watching. If the stock falls to 15 or something, probably you can buy and you can sell if it reaches around 25 and 30. And you can keep doing this as and when you see the opportunity. That's all for Rivian. Thanks for watching. If you like my content, please like, share, and subscribe. If you have any feedback on any other metrics that I must have used or something else I must have considered for Rivian, please comment below. Thanks.